Hello everyone, welcome back to another Lumley trading live stream. Should be live and everything now. So we have a few things we want to run through. Again, the market opens in about 30 seconds from now. I want to quickly cover the main thing. Again, a few of the banks have now released earnings. I think JP Morgan, Citi, Wells Fargo and State Street. The main one I'm always focused on is what is JP Morgan doing now? An absolute smash in earnings. Again, I'll quickly put this in the corner so you can see it. That should work. Now, again, record-breaking releases. Adjusted earnings per share smashed. Came in at $4.75 with the expectations only being $3.80. Again, markets have just opened. You've also got the managed revenues coming in at $42.4 billion. Compared to the estimates of 37.1 billion. And then again, you've got the after-tax gain of 1.8 billion. That's from the First Republic acquisition. You've also got the return on equity coming in at 20% compared to the expected 16.3%. Sales and trading revenue coming in at 4.6 billion compared to the 4.3 billion expected. Again, investment banking's revenues coming in at 1.5 billion compared to the 1.4 billion expected. And what's even crazy with all of this, not only have they done record-breaking profits through here, well, at least compared to expectations, they've also been hedging more of their risk. And what I mean by this is, look, their provision for credit losses. They put aside, or they were expected to put aside 2.6 billion for any credit losses. But they put away 2.9 billion and was still able to beat all of these expectations, which I find absolutely crazy that JP Morgan was able to do this. And then the last thing I want to cover related to JP Morgan then is just what Jamie Dimon said in the press part. And again, this is stuff we already knew, but again, the US economy continues to be resilient, consumer balance sheet remains healthy, and job growth remains strong. So again, that's the key cover from JP Morgan. Key thing I'm paying attention to. Will probably provide some good trading opportunities today, so we'll see how that rolls out. So what we will do is put some key things. Again, we're pulling back on the open. So again, we'll see how this plays out. Really looking for that anchored VWAP if we do start to pull back. Again, it wouldn't be a surprise to see maybe a potential gap fill and then a continuation. So that's what I'd probably be looking at on JP Morgan. Again, you might see that buying pressure come in a bit early at 150, but definitely looking for the upside potential on JP Morgan. Snap as well played out really nice from yesterday's level, was around 13.90 at the highs. And again, already down 40 cents on a stock like that, which is a pretty decent amount from percentage side. Delta opening up weak, which is quite annoying. Again, we do want to see it kind of at those high or low 50s, 51s, 52s to start looking at it short bias, but we're not quite getting that move yet. Now, Plug is also a big mover today, so I'll quickly throw that on here. Again, another big gap. We had our key level at 1280. We came close to hitting it yesterday, but didn't quite. We've now basically gapped above it. So again, I wouldn't be surprised to see it retest and then that continuation to the upside. If you gap above the level, usually shows you quite a strong strength. So again, breaking above it, coming back to retest this level, and then a continuation to the upside now wouldn't be a big surprise. And just to confirm, that level has actually slightly changed. It's actually 2 cents lower. And the reason that is, so it's actually down at 12.85. The reason these levels are getting lower, because again, I would be cautious on the upside of this stock. It is been weak over the 6 month and the 1 year. Whenever you see this, again, I tend to prefer to trade the direction. If you see the 6 month in a strong downtrend, the 1 year in a strong downtrend, as it comes into these levels, they're probably going to be high probability shorts, whether I'd probably be a bit more patient on that one, but from the second deviation and above, so $14.30, $8 or $19, $17.35, any of these levels, definitely looking at them short bias. We also have Mullen up around 4.5%. Again, not a stock I would want to be touching. Going on to the large cap sites, we do have UNH. They did just have their earnings. Their earnings per shares came out at 6.14. Can't exactly remember what their estimate was, but I think that was a beat of estimates. I think it was in the $5. Oh no, okay. So yeah, their estimates were $6.01, and obviously beat that by a tiny bit, coming in at 6.14, or actually a decent amount, coming in at 6.14. So United Health Again, relatively strong earnings, which is weird. They beat nowhere near as much as JP Morgan, but they're up 3.5% today, while JP Morgan's still only up about, or just under 1% as of right now. But that's just how we are. Not really near any key levels though on UNH, so again, not something I'm really all that interested in. The high or the closest resistance is 490. The closest support is 444. So a bit of a move either side needed to come into any sort of key level. Roku still continuing the strength. We do actually have some key levels relatively near on this. These levels actually do need to be updated. So let me quickly remove the old ones. You need to be a bit cautious because I have the ones I was testing. But yeah, with Roku, we still have an 81.50 level, and we're basically retesting this $78.10. Now, I wouldn't be looking to trade this level. The reason for that is we've been hovering on this level now for 3 days, as we're really staying at those highs. And by that, I mean, again, if we zoom out, you can kind of see a bit clearer. Coming into it, we're selling off. Coming into it, we're selling off. You can maybe count that a sell-off. And now we're testing it again. So again, we might get that same reaction of a sell-off, but if your buyers keep trying to take you to that same resistance, you're eventually going to break. So again, I wouldn't be shorting this level. I think there's now too much strength and a break is definitely likely. So again, potentially looking for that break to that next level, which is going to be around the 81.50, which then we can look at potentially playing short bias. We'll cover any other quick stocks if they're near key levels. Again, Unity still waiting for that push to the upside. That $49.50 level has now updated to $50.20, coming a lot closer to the 1 year level now. The 1 year level is at $50.95. So again, that's really then what I'm watching for in Unity today. We can kick that up a tiny bit, and this is where I'll be looking to swing it short bias. Nvidia also up just under 2%, still hitting 52-week highs. 52-week high now at $469.66. We also have kind of the leading stocks on down on the day, which is going to be T-Mobile. Actually, relatively near a key level, has broken its $14.90, which is its first deviation on the 6 month. So again, we'll plot that down so you can see where that is. Again, this is right now a 1 hour chart that will be adjusted in a sec, but we've gapped through it. Again, wouldn't be unlikely to see a retest and then a sell-off. Don't know what this move is off though, because there doesn't seem to be news related to it. Okay, never mind, there is. JP Morgan analyst Philip downgrades AT&T from overweight to neutrals and lowers the price target from $22 to $17, but it's still selling off much below its price target. So right now then the profit target, or the target to the downside, is going to be $14.25, which is our second deviation on the 1 year. So that's what I'd be looking at for AT&T. Could be a potential bounce or potential swing long coming off that level. Again, I'd be a bit more cautious on the swing long, because again, I like to be paying attention to what the longer term charts are doing. The 6 month and the 1 year are both showing downtrend. So again, I would be a bit more cautious, probably take some smaller size, but we would be hitting 52-week lows. We've already broken 6 month lows, but 1446 is our 1 year low, 52-week low. So we're coming in relatively close to that as well. Oh, what did you say? You thought? That scared me for a second. I saw a mute. I was like, I best not be on mute again today. That was so annoying yesterday. But I'm guessing it was alright. I hadn't actually opened it up. Now I usually check on my phone, but I normally forget. Yeah, I thought you better. Cool. Making sure I wasn't muted. That would have been quite annoying. But yeah, that was basically then just a rundown of everything. I think I had a few alerts. Okay, yeah, JP Morgan, basically, again, I told you that first 5 minutes would normally be quite volatile. You see basically people either taking in a lot of profits or a lot of stops triggering. We're now getting bought into this, and we are going to probably retest this 152.30. Again, we did hit this pre-market, so again, I would be a bit more cautious on it, but as long as we can start breaking it and holding, going to start looking for those moves to the 156 again on the long term. Started to take a tiny bit of size out coming into that move, but really waiting for those further moves, kind of that 158 to get out quite a lot of it on the long term account. And then I think I had a few alerts go off today. So I had 2 alerts, TD Ameritrade and T-Mobile. So T-Mobile actually we've just gone through, So actually I will set a new alert for when we actually hit those lower targets. Again, that's at 14.25. So I'll put an alert out at 14.35 because that will also alert us as we have broken below that 52-week low. And then the other one was TD. This is actually pushing to the upside. I don't think they release their earnings, but it's, yeah, they haven't. It's just moving off the sympathy of the other bank earnings. They got a level though at $64.02, so I'd be looking more at a psychological $64 then on a level like that. That's the 1 year level, and quickly can adjust the 6 month level because that has slightly changed. And there we go. So then that's what we're looking at on TD. Haven't quite hit it, but we are getting close. Again, potential short coming into $64 then on TD Ameritrade. So I think we covered everything that needs to be covered. So unless I'm missing anything, let me know. Otherwise, I guess we'll kind of just let the Bloomberg play out for a bit. And again, we will actually, I need to get it up. I haven't put it up yet. We're going to have Squawk playing in the background. Again, that will just shout out the key breaking news or whatever you need to hear. As it comes. Again, that's different to the actual Bloomberg TV. That would just come out live. Thoughts on Workhorse? Is that WKHS stock? I think it is. Yeah. So, this stock, it depends what your view is on it. And by that I mean, what's your outlook on it? What time horizon are you looking at? From a long term, I'm not all that keen on it. And the reason for that is, again, all you need to do is look at the long term. Oh, basically just look at the 6 month and 1 year. All it does is sell off from both of those perspectives. You had a high of 475, you got a low of 70 cents. If a stock's selling off that much, if you're throwing any money in, they need to be willing to lose it all if you're holding it for the long term. So that's one thing I will say. If you're looking at it the long term, only throw in what you can afford to lose, because chances are you probably will. But one good thing on this is it does provide quite nice trading opportunities. So from a trading opportunity, I like it, but I'm probably liking it from a different perspective as you, because I don't like it long bias in any way or form, because fair value is at 65 cents. So to me, to be long bias on a stock like this, I would want to catch it below the 65 cents. But again, looking at the long term, I don't want to catch this long at all. So then the only way I'm looking at this is short bias, which I'm happy to do from really that 125, which is our first deviation on the 6 month, 147, which is our first deviation on the 1 year. So that is a key range of resistance where I would be happy to start looking at it short bias. One thing, let me quickly check. So they are hard to borrow, but they do have options. So that's quite nice. We can at least get in with some risk-defined strategies. Again, that could mean outright puts or vertical spreads, which would be probably the two ways I look to trade it. But yeah, coming into that range is definitely what I'd be looking at. And then if we did break higher, definitely looking at it short bias at 186, 238, 247, and 330. So again, I like the look of it. From a short perspective, I do not like this stock long bias, but again, it might be the stocks you like investing in are these kind of low penny stocks, which, you know, they have a high chance of going to nothing, but in the rare chance they do pop, that's where you can make a lot of money. So if that's your plan, again, I can't really comment on it because I don't like investing or looking at it like that. From a trading perspective, I like it, but I only like it short bias and with defined risk. So I hope that clears everything up from my side. Again, we're going to now then let the Bloomberg play out for a bit so I can do some other things without having to basically kind of chat the whole time.
The government and its finance team are really smart, focused men and women who are trying to make sure when the war is over that we have the construct of a fair and just investment pool. And that will attract a lot of foreign capital.
Larry, you mentioned private capital, and I'm curious about that in terms of not private equity as much as private credit, which has just grown enormously.
Yes.
Do you continue to see it as a growth opportunity for BlackRock? And how do you see it evolving over these next couple of years?
I would say private credit and its role in the capital markets has been a blessing. As regulators put more capital constraints on banks, the beauty of the American system was we had an offset. And that was the capital markets, and that was private capital. And more, we're witnessing more and more opportunities in private credit. That being said, it's a pretty giant movement. And anytime we see a pretty giant movement, are we going to see people oversized?
Right. Or are we going to see more regulation? I wonder as well. Is that a threat? Or?
I mean, obviously, if we're going to have more regulation, is it going to be in the form of the asset owners, the insurance companies, or is it going to be in the form of the asset advisors? And that's being asked by the FSOC. That's being reviewed right now by regulators of insurance companies. There is no question in my mind that a great economy has a great banking system and a great capital markets. And no country in the world has both like the United States, not even Europe.
Again, JP Morgan's now breaking through the 52.30 level, coming into $153. Again, we just want to make sure it can kind of hold this level as it can, gives us a bit more confidence, and then we could be looking at kind of that 156.78 target. And Delta's looking very weak kind of since it's over, just selling off quite sharp. Doesn't look like we'll be able to get that swing entry, which is a bit annoying, but didn't want to force the trade too early. Again, the VIX is also slightly up on the day. The dollar and the euro, well, the dollar's basically flat on the day, down about 0.05%. Again, the 2 years are down about 0.1%. The S&P is up about 0.1%.
BlackRock, we don't do this with leverage, and so
right.
Listen, I know you have a hard out. I want you to tell people how much better people do in life if they're optimistic.
If they're
optimistic.
I think the results of the first 6 months really shows it.
And again, this is Larry Fink speaking. He's the guy who runs BlackRock. Again, they're the ones who control about $10 trillion.
And everybody was just cathartically and frightened. And we're up 15 or 17% year to date. And so most people don't know how to market time, and most market timers don't do a particularly good job. And so that you have to be...
UNH still looking strong, by the way, up now 5% on the day, sitting around $470.
Must have the day off. I heard you were here. I don't take the day off if Larry Fink is here. Larry, thank you so much for coming in. BlackRock is an amazing company, and you have done an incredible job.
Thanks, guys.
Thanks, Larry.
Wow.
When we come back, we'll get to more. We're going to chat some markets here while we got the chance. Jim, we should just mention healthcare outperforming this morning.
According to TASS, Russian government proposes decreasing Ural's discount to $20 from September the 1st.
So many points, and it's been crushing. Look, it was like even in the end, people said they're being hurt by pickleball. How crazy is that? But they are able to buck the trend. But I want people to understand that the whole industry is under tremendous pressure, given the fact that there are a lot
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
It was at 558 and is now only at 470.
I just want to go back to something you said. It's under pressure because of pickleball. Did you just say that? You did. Because so many people are playing and getting injured.
Yes. That's actually.
Just wanted to make
dates
sure.
Back to the UBS note a couple weeks ago, right?
Yeah, it's factual.
I know.
Factual,
it's just
maybe
sweeping
cool.
the country, and a lot of people get out there and got to warm up.
Right. Can I just switch things for a second? I want people to know who Larry Fink is. Larry Fink played a big role in Exxon buying Denver. Now that's an extenuated thing, but his view on climate risk as an actual risk to our economy has made a lot of people feel like, you know what, I don't know if I've got to be and pressure everybody, including fossil fuel companies, to please help this earth. And you know something? He has a conscience.
Yeah, I still think, and I try to get an answer from him, though, that the capital doesn't necessarily flow where it would be best used to decarbonize because of these no-go areas that don't make sense.
No, it's true, but he's offered...
You don't invest in a company that you think has a big carbon footprint, even though they may be trying to actually improve it.
You're right, but he does offer the choice for institutions to be able to say how you feel. Now, it's the first level of democracy I've ever seen in the institutional level, because he has funds where you can switch, not individuals. But I can't encourage people more. They've got to be able to have more ability to put more than...
And AT&T is about 10 cents off the 52-week low. Again, that's at 446. We're currently at 1458.
Just put double that, and he's going to help.
There'll be a wave of retirements in the next
I know, and I'm
years.
very worried that people won't have enough money.
of the words fixed income. Fixed is hard to deal with.
Yeah.
Especially when you're looking at it.
Meanwhile, mega cap tech's having a good day again. Decent day.
How's NVIDIA?
NVIDIA's doing very well, Jim. You'd be happy to know.
Well,
It's
you
up
know, the
another
other day,
almost 3%. Its market value is now $1.16 trillion.
well, they're 40. They have a lot of chips. They're 45,000 times faster than the next one.
That's a new high, right?
He has cars that predicted the hottest day in the Sahara Desert weeks before it ever happened.
He has chip. You're saying he has what?
The graphic user cars.
They can predict the weather.
They can predict the hottest day of the year. No, there's people don't understand
Because of what they're processing.
Yeah, people don't understand what he's unleashing
and
here.
how.
Like he and it's him. I mean, yes, Microsoft is terrific. They're going to use it, and maybe we know that Alphabet has something, but Da Vinci has come up with the helicopter in real time. If you go to the Great Da Vinci Museum in Italy, you'll see drawings for the helicopter. Well, Jensen Huang is developing.
So we are now 10 minutes away from the top of the hour, where we do get the University of Michigan sentiment prelim data for the month of July. So the sentiment prelim, again, the forecast is 65.5 and the prior 64.4, with a range of 68 to 64 expected. So their one-year inflation prelim forecast is to tick down to 3.1% from the prior 3.3%. The five-year inflation prelim forecast at 3% from the prior of 3%. Their conditions prelim forecast is 70.5 from the prior 69, and the expectations prelim forecast is 62 from the prior 61.5.
This morning, as you heard, tech doing pretty well, banks hanging in there, healthcare playing along. Check out bonds. We will get UMISH in about 10 minutes.
Again, the prelim's actually normally quite a nice trade, especially if you're on the futures. Normally a fade, so you could, well, probably will look to trade that. Again, yeah, normally a fade. So basically, like what we look for the crude oil, the natural gas, we'll pump one direction, whatever direction it goes, we basically play against it. And again, look for that overall fade. So that's what I'll be looking at from that. We have just had two alerts go off as well. Adobe has gone off. So it's re-hitting its second deviation on the 1 year. That's at $515.75. So let me quickly throw that. I think this level is readjusted, and I think we've already broken it. So I think the alert was a bit delayed. I probably need to redo my levels this week. I think it's been 2 weeks. But yeah, we did come back into that level. And quickly zoom it out to see. I'm assuming then yesterday was the first day we hit it. And yeah, we kind of just broke straight through anyway. Again, the level would be a tiny bit different, but probably not all that big from last time. So I'll do that. And then we just had actually Google go off as well. So I'm going to quickly have a look at what Google's doing. The alert's gone off. I'm not really too sure why. It's not really near anything. There's another alert above it. So yeah, I'm guessing that was probably an accidental one going out then. But again, on Google, then we do have resistances coming into $132. So if we can continue up, that's what I'm basically going to be paying attention to on that side. So we'll see how that bit goes. Looks like we're getting a bit of pop on Delta, coming into 47.30 as of right now, off those lows of 46.86. JP Morgan as well, slightly pulling back, so potentially come back to the anchored VWAP. I think that will be the nice long on the day if we can see that, because again, the catalyst is strong. Coming into the anchored VWAP should be a nice bounce.
Lining, that's going to be a lawsuit to make.
Yep. JP Morgan today cuts to neutral. They go to 17. They talk about this copper lead sheathing liability. Not to mention the fiber slowdown that they argue will shift some share back to cable.
Again, we talked about the AT&T downgrade from JPM. It is moving down near those 52-week lows. Don't know why it really comes on for like those few seconds. But we can check out AT&T while we're waiting. Again, now hit a low of 14.55. And let me just quickly check in what that 52-week low was, and it was 14.46. So yeah, 9 cents to go as we can break down. And then again, we will be at those 52-week lows. We'll see if any buyers are sitting there. I can probably actually have a quick look now to see roughly if there's any buyers sitting there. Weirdly enough, actually, no one's actually sitting on that 52-week low, so no one's sitting on the 14.46. Or there's not massive orders. There's 700 orders going out at 46.
With a range of 68 to 64 expected. Their 1-year inflation prelim forecast to move down to 3.1% from the prior 3.3%. Their 5-year inflation prelim forecast at 3% on the prior 3%. The conditions prelim forecast at 70.5 on the prior 69, and the expectations prelim forecast at 62 on the prior 61.5.
Again, when I'm looking at that prelim coming through, the main thing I'm focusing on, whatever you're on Forex Factory, investing.com, doesn't really matter. Again, it's just a prelim consumer sentiment. And then all I'm really paying attention to is this number. The only time I will not fade this move is if this comes out below the number expected. So this is estimated at 65.5. So the only way I won't trade this is if this comes in at 49.9 or below. Again, you're probably never going to see a move that wide. So I don't really even pay attention to the number when we're that far away. The only time I pay attention to this number is if we're at kind of 55 or 45. Because again, it's the flip going past 50 on the index, which makes a big move. So if it comes out in there, it's basically counting as in line, and again we can look to fade that move. So we have about 3.5 minutes till that release comes out. Again, a fade, a bit like the crude and the natural gas trades that we do weekly. And again, probably going to look to trade it for the futures, but again, you could probably trade it through SPY if you've only got stock or options account. Futures I just prefer on this release because again you can get quite a lot per tick, and again they're usually just super liquid going into it. So we'll see how that goes. But yeah.
Every trade.
Time for Jim and Stop Trading.
Oh, what's another day without a mega cap tech going well? And this time it's UBS upgrading Microsoft, saying that the spending could stabilize for their web business, and that would be gigantic. And so there it goes. I also think it's going to get Activision Blizzard.
Another great mea culpa in that note.
Oh, my God.
We downgraded early in the year, figuring Azure would slow. Didn't happen.
It's so hard to be an analyst covering these because they're otherworldly. I mean, anyone who hates NVIDIA, let me send you a letter to your funeral.
Man. Next week, meantime, we'll get some retail sales and housing, blackout window on the Fed.
Next week, this day is really important because you get BlackRock, you get Wells. But there was an upgrade of the housing stocks. And I don't know if you heard what Larry said, but it is really important to people that they start building.
Coming into this release as well, we are going to be leaving the queues up here as well, just so we can be seeing basically how the queues are reacting. But again, it should move pretty similar to both the S&P and, well, the SPY. You're mentioning AMD. Let me have a quick flick on that before the release comes out. Oh yeah, what, first deviation 120.80. So yeah, a few cents off. But on the chart, so at least I know where it is. Again, a minute and a half now till the release. There we go, yeah, AMD 120.80. So we'll see how that goes. Again, the news may also come through here. Not sure how quick it comes through here. So again, we will have the Squawk playing, and that's what we'll be paying attention to. So I've now got it on at full volume for the Squawk. So again, he'll shout it out as it's coming out. But again, really, we don't really, or shouldn't have to really be paying
1 minute
attention to
remaining.
it.
I'll lead with the University of Michigan sentiment prelim.
So again, that's the one he says first is the one I care about. But again, as long as it's above 50, should not matter, and very unlikely that it's going to come out different from there. Again, we are also seeing JPM pull back, even though the SPY is staying strong. So again, if it comes back into that anchored VWAP, can definitely be looking to trade that. Okay, just getting ready to trade. Again, got about 20 seconds now till release. 15 seconds.
Ten seconds.
Actually 4. It's delayed slightly. Okay, we're getting that move to the downside. Again, normally looking for that fade.
72.6, 72.6. That's higher than the forecast of 65.5. Expectations prelim at 69.4, 69.4. Higher than forecast 62. Conditions prelim at 77.5, 77.5. That's higher than forecast of 70.5. So the 1 year inflation prelim at 3.4%, 3.4%. That is higher than the forecast of 3.1%. And the 5 year inflation prelim at 3.1%, 3.1%. Also higher than forecast of 3%. So looking to the markets here, noticing some dollar strength emerge and some weakness in the US indices. So this is coming as they have upgraded their 1 and 5 year inflation expectations more than analysts expected.
So we've been set about 80% right now.
So just to repeat that, the 1 year inflation expectations came in higher than expected at 3.4% on the forecast of 3.1 and the prior of 3.3. 5 year inflation expectations also coming in higher than expected at 3.1% on the forecast of 3% and the prior being at the same. So again, did you see a little bit of whipsawing to the downside in the US indices there, and some strength in the dollar has emerged?
Okay, I've just jumped out completely now. It just seems to be consolidating. But again, same plan as always. Had some position.
This stream is sponsored by To The Tick.
Had some price sitting at the yesterday's high for first entry, and then again we always have the orders mainly sitting at VWAP if it's close enough, because that will always be the best entry. But again, basically getting that fade again, that's why we cut out quick, because if you kind of don't see that move happen right away, you know, for the sake of a tick or two, there's no point staying in. Again, the bonds are getting really weak off this. They're staying and they're holding. And again, the dollar is getting strength. Again, it's euro dollar, so the euro is getting weak. The dollar is getting strong off this release.
To 3% following that data. 10-year note yields rise to around 3.805%.
Going all the way back to July of 21. So these are powerfully strong numbers. Now let's see what happens with inflation. Also a bit strong. 1 year inflation popped up to 3.4%. 3.4%. Now, just to confirm, we've been mostly going down. So to hit 3.4%, we only have to go to last month when it was, May when it was 4.2. But the point is, we're expecting a number of 3. Many whispered that it will be even lower than that. So 5 to 10 year is 3.1. We've had many 3.1s. That isn't as shocking as the 1 year. And we could clearly see that interest rates have moved up a little bit. But do keep in mind that we are down huge on the week. 379, 380 right now means we're down 27 basis points on the week on a 10-year, even though it's up several on the session. Sarah, back to you.
Very interesting, Rick Santelli. Rick, thank you very much. And good Friday morning, everyone. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber, live at Post 9 of the New York Stock Exchange. Take a look at stocks this morning. And we're stronger again. It's been a nice win streak this week, up 0.25% right now on the S&P 500. You've got strength in technology again today. That's why the Nasdaq's up 0.33%. The weakness is coming from energy, materials, utilities, and industrials. Also checking out financials in the wake of some big bank earnings. Pretty much unchanged, though mostly good news from the likes of JP Morgan and Wells Fargo. We're 30 minutes here into the trading session. Here are 3 big movers we're watching, and we're going to start with UNH, United Health, beating on earnings, raising its guidance, giving the stock a boost this morning, and the Dow. More on that quarter later this hour. Look at Coinbase extending yesterday's rally following a federal judge's ruling Ripple's XRP token did not violate securities law. Coinbase is up now more than 2% this year. And AT&T touching a new 52-week low after now JP Morgan downgrades the stock to neutral over increased competition, both in its wireless and cable segments. Stock's been weak lately. Guys, overall markets, as I mentioned, have been very strong this week. We're up almost 3%.
So the inversion in the US 2-year and 10-year yield curve deepens to minus 91 basis points.
Which was inflation, weaker than expected, softer than expected. That was backed up by PPI.
And dollar extending gains, according to the Dixie, up around spot 2% now.
The story today, and just something to be following as we go into the next few weeks, is it too early to declare victory, both for the Fed and for the markets, on this inflationary fight? As Rick just mentioned, the data is still coming in strong. Consumer confidence and inflation expectations. And we've heard from now a number of Fed presidents just in the last 24, 48 hours that are not so convinced and willing to say, okay, one and done, which is where the market is. Listen to Mary Daly, San Francisco Fed president, on the show yesterday.
I'm certainly mindful of the fact that while we've put over 500 basis points, or about 500 basis points of tightening in the system over a rapid period of time, we still have an economy that has a lot of momentum. And this is why we continue to say, well, we are going to keep working on rate hikes until we are sure that inflation is on a path to come down to 2%. It's one of the reasons, as you mentioned earlier in the program, that, I said 2 rate hikes this year is still a reasonable projection. It's for that very reason you said. It is a risk that we under tighten. It's a risk that we over tighten. And that's why data dependence, meeting by meeting decisions is so important right now.
And the question, guys, there was, is there a risk of inflation popping back up? It's what we saw in the 70s. It doesn't come down necessarily in a straight line. Now, the market's thinking that here it might, but I don't know, housing is rebounding. Copper and crude oil are rebounding. The labor market is still super tight. All of those things make it a risk that inflation might pop back up. That's all I'm saying.
Well, and speaking of Larry Fink, he was going through all of the
So Wells Fargo has taken some credit tightening actions, according to Schaaf.
The CHIP Act or the infrastructure bill, but he also did get to the idea that it's going to keep the labor market very tight, and therefore pressure on wages.
Right, and what corrects that? I mean, yes, you have all this tightening from the Federal Reserve, but if you have these drivers like infrastructure, chips, the American Rescue Plan, which is still getting doled out, I mean, that does create a lot of employment. And when you talk to railroad companies like Norfolk Southern, they see it. They see the infrastructure demand and they see the labor demand across the pipeline.
Yeah, I mean, consensus is still for negative payrolls in the next 2 quarters. So we'll see if that happens. It was interesting to hear Fink say the next $5 to $10 in energy is probably up rather than down. Tried to pin him down on disinflationary or deflationary effects of AI. He said it's probably 5 years out, maybe 2 to 5 years out. Not going to happen anytime soon.
As
companies are still trying to wrangle with the technology and how it's going to get placed.
So he thinks what? More rate hikes?
I don't think he commented on hikes per se, did he, David?
But he did seem to think inflation would be stickier, and so we didn't really get to specifics in terms of future rate hikes.
Also, with wage growth now, on a real basis being stronger, that's, to your point, going to fuel demand. Consumers are going to have cash to spend on a real basis.
I think the question for the Fed is, so are they going to go a few more times, right? Are they going to go in the fall? Because the market doesn't think that. And are they going to be cutting as soon as the market thinks into next year? Or are they going to have to keep this very restrictive, as they call it, rate or high interest rate for a lot longer than the market expects if we are seeing these signs of strength in the economy that put upward pressure on inflation?
Right. Another area we hit with Fink, of course, was just continued rates being as high as they are and continuing to be there, what kind of pressure that's going to put on the U.S. budget. Because as you might imagine, Mr. Fink is quite positive on the dynamics of the U.S. economy, but he did admit that higher interest rates mean higher interest payments, which is not necessarily a good thing. Take a listen.
Our deficits are out of control. And now with higher interest rates, yes, interest payments are going to be a major component of that. And that's going to put a lot more pressure on our programs, our defense budgets. All these programs are going to be really at risk. The only answer to that is growth.
Right.
Okay, if we have 3% growth, we're going to be able to solve some of that. If we have under 3% growth for a long period of time, the interest payments as a part of our budget is going to overwhelm us. But that being said, the dynamism of this economy at this moment is stronger than any place in the world.
We're going to get overwhelmed, but that being said, we're going to be okay.
Well, the growth is a good cure-all for at least, I mean, it helps with the high deficit problem, but his point on strong economy, higher rates, it kind of jives with what JP Morgan said today, Jamie Dimon said today, even though like a while ago he was warning about the hurricane. Yeah. I picked out this quote from what he said about the U.S. economy. He said, the U.S. economy continues to be resilient, consumer balance sheets remain healthy, and consumers are spending, albeit a little more slowly. Labor markets have softened somewhat, but job growth remains strong. Now, he also
according to the Kremlin, Russia made no statements on extending the grain deal. It's coming from Interfax.
The fact that we've never seen anything like that before, but that's the description on the economy. And all the big banks, Wells Fargo, JP Morgan, Citi, they all showed, I mean, some strength when it comes to the consumer and spending. And credit cards.
And none of them, Carl, particularly concerning when it comes to significant charge-offs. Wells Fargo did have some around commercial real estate. They continue to reserve for particularly office, but not overly concerned based on the comments from Charlie Scharf.
Credit card growth, at least at JP Morgan, up 16, I think. Not prior 18, so there's a view also that consumers not maxing out, at least, on credit cards, but we'll watch that closely. We are getting some breaking news regarding the airlines today, and for that, we'll turn to Phil LeBeau. Morning, Phil.
Good morning, Carl. Take a look at shares of JetBlue and American. Both airlines announcing just a few minutes ago that they will stop their joint ticket sales, which was part of the Northeast Alliance, which a judge has said, look, you've got to unwind this. They will stop those joint ticket sales next Friday. So through next Thursday is the end date for doing those joint ticket sales. Remember, this Northeast Alliance has been in place since the beginning or early 2021. A judge a few months ago said, nope, you've got to unwind it. And since then, JetBlue has said, we are not going to appeal this decision. We're going to concentrate on the merger with Spirit, the proposed merger, while American will continue with its appeal of the Northeast Alliance ruling. So the focus now for JetBlue, take a look at JetBlue and Spirit. It's what happens with that proposed merger. And remember, the DOJ is already on the record and is fighting this. That will play out in court over the next several months. Guys, back to you.
All right, Phil, watch that. Thank you very much, Phil LeBeau. Let's get back to financials today. JP Morgan, Citi, Wells all out with results as we kick off the earnings season. Joining us to discuss today, UBS securities analyst Erica Najarian. Erica, great to have you. I was looking at your preview note that JPM and Wells likely the best of the lot. Is that what came to pass?
Yes, absolutely. And I think that, you know, what's really going on here is JP Morgan and Wells have among the best deposit bases in banks, and thus they're earning a lot more in net interest income. But I wouldn't necessarily extrapolate these results into next week as we get into regional bank earnings.
Yeah, that and also the investment banks. Sort of the color commentary around M&A was green shoots, but also headwinds. I wonder how you think that's going to play out.
You know, look, I think, you know, similar to how investors are thinking about banks, a lot of corporates are looking around and saying, gosh, there's still so much uncertainty in the outcome. You guys talked about this at the top of your show. And I think that precludes corporates from really making decisions on whether or not to partner with other corporates. And I think that's why, you know, a lot of these banks are hesitant to be more bullish about those green shoots in M&A activity.
Is your concern about the regionals centered around real estate or the rate environment right now?
Great question. So, Carl, underneath the surface of these great results, we're really a little bit of deterioration in commercial real estate for both JP Morgan and Wells Fargo. So for those balance sheets, you know, with that earnings power, it's really not that consequential. But as we get smaller, and if we extrapolate those results, the CRE deterioration, you know, a lot of these smaller regional banks may not have as much earnings power to absorb that. The other thing I would say is we're not quite out of the woods in terms of deposit repricing for the regional banks. Now, I think that's fully reflected into the stocks, but I think these are going to be the best in class with regards to net interest income outcomes because of the fact that JP Morgan and Wells have better deposit bases that have higher levels of transaction accounts that don't demand a lot of yield.
So, Erica, is this earnings season in a way, if you're right, going to sort of continue to widen that gap between our biggest banks and their performance, so to speak, and how they're rewarded in the marketplace versus so many of the regionals and smaller banks?
I think potentially, right? Because I think at the end of the day, you know, the issue with the banks right now is that the sponsorship of banks from long-only investors is very limited to the largest of market cap. You know, there's still a lot of, you know, PTSD from what happened in March and April with regards to the bank failures. And given the uncertainty on the economic outlook, are we going to have a soft landing or going to have a hard landing? How much more does the Fed go? I think that precludes a lot of long onlys from saying, okay, these regional banks are bargains at this point. So while we think that the net interest income headwinds and challenges are priced into regional bank stocks, what's missing is that sponsorship from the long only community that wants to buy regional banks ahead potentially of a recession and a credit cycle.
Erica, I wanted to ask you about Wells Fargo in particular, because we're going to talk to the CFO next hour, Mike Santomassimo. This one was always considered by analysts like you the inexpensive one because it had the Fed cap and had been punished so much from a regulatory perspective. Is it still looking that way? Inexpensive?
Yeah, look, I mean, Wells Fargo is trading around 9 times this year's earnings. And I really like this story because it's a transformational story in which they're remediating the regulatory issues, but there's also a really good franchise underneath. And at the end of the day, that funding base, that core funding base is going to be a big difference maker for Wells Fargo. And I like that they're now in the stage of their transformation where they're investing back into the company, because the better way to really fix your earnings power is to invest back into the business and improve your revenue power. And I like that they're doing that.
Hey, finally, Erica, where are we? Is the line filling in on expense growth control? How did that look this morning?
Look, none of the banks that reported this morning revised their numbers higher. So that's good news. They're not necessarily spending, the top line beats at this point. That being said, keep in mind that there's still a little bit of inflationary pressure to costs. And additionally, I think what you might...
As a heads up, AT&T ticker T did hit 52-week lows, 4 cents off its second deviation at 14.29. Again, that 52-week low was 14.46, I believe. Now the 52-week low is 14.29.
List. I don't know how you guys process so much so fast, Erica. Thanks. Good to see you. Erica Najarian.
Good to see you.
As we go to break, take a look at the roadmap for the rest of the hour, including a lot more on this market rally as the bulls got us back to 45.25. Stocks aiming for their 5th straight day of gains, trading at their highest levels of the year. Wharton's Jeremy Siegel tells us where he might go from here.
Plus the latest around Microsoft and Activision. UK regulators have extended the deadline to review the deal. We'll give you the details.
And the Actors Union joining the writers' strike, shutting down Hollywood for the first time since 1960. We'll talk about financial implications. A lot more Squawk on the Street still ahead. Don't go anywhere.
I haven't really looked into the Hollywood strike. Does that literally even mean the actors, or is it just the writers? Because I imagine everyone else is compensated pretty well. Directors, the actors, all that stuff. So I don't really know who'd be striking. So I guess that'd be interesting, but I can't really see that move in the markets all that much. Might have the occasional or the few stocks that move, but not going to be something I trade either way. Again, if you wanted a deeper dive into the JP Morgan earnings, again, if you missed the beginning of the stream, we did just post a video on it. If you want to check that out, either now or after the stream ends. So that's all out.
Sitting at 81 out of 100, that indicates extreme greed, while the crypto fear and greed index is at 60 out of 100, which indicates greed.
Again, the one that was 81 out of 100, that's the stock index. I think that bit was cut off because I currently had that bit muted.
This stream is sponsored by TickStrike.
Anything you guys are looking at for today? Again, I think my main focus is still on the JP Morgan move. If we can come down to $150, quite like that big psychological level. Also, that 2-day anchored VWAP should hopefully be quite a strong support. Again, also looking on the Delta side, if we can push up to around that 4810, not only is it our anchored VWAP, but you also got the 2 deviations there. So they should also be strong levels. Again, AT&T on the, well, really, yeah, it's just been weak the whole time. We'll change that actually to a 1-day 5-minute as the other charts are. There we go. And again, the S&P is taking that prelim relatively good. Again, you get the fail like we normally expect. Could have been more patient. We could have got the exact trade. But either way, I like to be in and out that trade within the minute. So again, if you don't get that kind of whole fade within the minute, and we're kind of hesitating near the previous candle lows, which you do see quite often, again, usually I prefer to get out because, you know, not a 50-50 gamble, probably like a 75-25, whether it comes up, 75% chance it comes up. But, you know, you still got that 25% it goes down. And again, considering if your average is here, you're still taking on all that risk if you got your stop at the lows. Kind of just eats into the profits for no reason.
On the street, stocks are continuing their week-long rally now, up 1/3 of 1% on the S&P. Our next guest says positive momentum is still strong and that the Fed should stop raising rates. Wharton School Professor of Finance Jeremy Siegel joins us now. You've been saying this for a while, Jeremy, and it doesn't feel like they're listening to you because what we get is still a lot more hawkish Fed speak. And now there's this idea that I talked about this morning that they're talking a little bit about, which is that we can't necessarily assume we've seen the last of inflation. It could bubble back up. Our economy is still doing okay. Why is that wrong?
Well, I mean, it's a Goldilocks economy. I mean, strong economic growth and falling inflation. I mean, you hit it yesterday. I mean, Sarah, I looked at the jobless claims dropping, so that temporary weakness that we saw, earlier this month, looks like it's disappearing. However, I don't see any reappearance of inflationary trends. I see stability. Oil has got its footing. Commodity index have sort of stabilized. The housing market is stabilized, but I don't see anything that big inflationary uptick. I'm not concerned about today's University of Michigan. It was taken before, before the news came out on the CPI and the PPI, and that kind of. When we had CPI year over year down to 3% and core under 5%, we got headlines in all the major newspapers, and that's what really affects that consumer expectations.
Brent crude is back up to 80. It's rallied even in the face of weaker Chinese data. Some of the other metals have rallied as well. Housing is now on the rebound, and we know that's an important one for the Fed. And the consumer's in decent shape, we're told by the bankers this morning. I mean,
we have JP Morgan coming into the anchored VWAP now. Again, 150.10 is at 130, 20 cents off. I'm going to put it up on my main chart. I'm liking the look of the anchored VWAP there.
A lot of them are cash transactions. We know that the 30-year mortgage is going up to 7.
Need to quickly open up Tasty Trade though to trade it on there because it's not on the other platform.
Somewhat of a problem for those that have to
but okay, it's at 150.13 to be precise.
Definitely have to be considered. I think it's wrong to target wages. Wages, as we've mentioned, have fallen behind inflation since the pandemic. They're in catch-up mode. We need to bring people into the labor force. I don't think they've been the source of the inflation. So I think it's wrong to say we're gonna. It's almost like
also gonna actually look at trading this probably with shares. Looking to have a stop probably below that 150, probably 149.90, and just going with a few hundred shares and look for that bounce.
If they start going up again, then clearly the Fed has to stay on guard. Listen, I think in a week and a half, we're going to definitely have the another quarter point that's baked in.
Amazon alert just went off as well. We'll check that in a sec.
Certainly on what's going to the evolution of the data over the next 6 weeks after that. We also have to take into account that James Bullard, surprise retirement, one of the most hawkish members, although his counterpart at the Federal Reserve, Waller, on the board is very hawkish, as well as several others that can certainly take his place on the committee.
And they've been right. The hawks have been empowered by the data because the economy is not falling apart. And yes, maybe we haven't felt the lags, and clearly everybody's a little bit worried about that.
I still say the lags, you can't ignore them. I know that several Fed officials said, oh, we don't have lags anymore. Well, hey, take a look at their decision on tightening for inflation. Between that surge of money that started on the month of the pandemic, March, and continuing next year, we didn't get that surge of inflation till 2021. So I don't think lags are, dead and gone.
Got my order out at 150.15. Again, looks like we're going to break to it now. So see if we get that bounce.
I'd much prefer to let a couple of these pass and see really what happens before I start hiking again. But nonetheless, the Fed might stick the landing here against all expectations, to use that Olympic term.
Hey, Professor, as for the market action this week, I noticed the Goldman Most Short Index up 11 in 5 days. Some of the trash here, so to speak, is getting bought. Does that worry you?
Potentially already getting that bounce. Already pushed 40 or so cents from those lows.
NASDAQ is at 30 times earnings and value stocks are 15 times earnings. And that's one of the biggest gaps we've ever seen. And value stocks are still positioned for a mild recession, actually, while the growth stocks say, what me worry, AI
That's just
and
me
everything
adjusting
else
the
is far more important than a dip in the economy. That psychology, can drive us much further. History has
Not sure
said
how
that.
I see AMZ.
Is
that AMZ? Did you mean, or AMD?
Group of stocks, it can continue much further than the fundamental values. I'm not going to. We're nowhere near internet levels. We're way below that. But can this trend go further?
Oh, Amazon.
Yes, absolutely.
I just had the alert. I haven't actually looked at it.
No matter what happens
though.
with the Fed, even if they keep hiking into the fall.
Oh yeah, coming into the second day, that's what I'd be waiting for anyway.
Longer than the market thinks.
137.30 could be nice.
Question, just how strong the market has been.
Well, it has been very, very,
but we have actually hit that for the first time.
Worry the Fed. That's basically what the
so I wouldn't be looking at it with too much size because we did hit that back on the 2nd of June for the first time. The credit levels have just readjusted.
More data, until we have to see what they're going to do in September. There's a lot of speculation, but they are really totally data driven on that. So I don't think anything that's going to happen with the Fed. They're going to remain open. There may even be a dissent because I do know some voting members that do think we've gone high enough. We'll see whether that happens. The strong data might have bring them.
Yes, I had another Amazon alert go off. I'm guessing I placed it wrong. It was like JPM's about to hit the entry there. Yeah, I placed that wrong.
We're more worried. They're going to say we think it's going to hike, and it's an open meeting for September, just like it was an open meeting for July. In that case, I think,
my main focus is on JP Morgan right now.
Continue until then.
It's good to talk it out.
Kind of keep getting kind of consolidation. Again, I'll throw this onto a 1 minute so you can get a clearer picture.
Still to come this morning, regulators in the UK extending their deadline to review Microsoft's deal to buy Activision, the latest in big tech M&A, coming up after the break.
Okay, again, we kind of keep bouncing just before we're hitting the level. I wouldn't actually mind knowing where. Actually, that's behind here. If it's already hit the anchored VWAP with the after hour data. No, it seems to be relatively the same. It's what, 3 cent difference, 4 cent difference. Okay, cracking down now. Order's going to fill any second now. There we go, we're in. Again, we'll see how it does. If we start breaking below that 150, probably cut out. Because then it's probably not holding all that well, so that's what I'll be watching for. Okay, we're cracking below again. If we show weakness, I'll probably just jump out. Because again, we're trading this with shares, not options on this one. Okay, looks like we might be getting out of this for a loss. I'm just going to jump out. Again, not feeling the strength on that. Oh, now it looks like it's popping up.
After a few days here of not discussing what is going on there. Of course, this week included the big...
So again, we got on this. We ended up getting in at 150 and 10 cents. Got out at 149.84, so it was for a loss.
Unable to get an injunction to stop the deal. It has now gone to the Ninth Circuit to try to appeal that decision and get a stay as well that would prevent Microsoft from closing the transaction. That said, as we've been saying for so long, so much of the focus continues to be, as it should, on the regulatory process in the UK, the antitrust regulatory process, namely the CMA, the regulator there. The news this morning.
Oh yeah, what are you saying, Bradley?
That they extend their review of essentially the transaction.
Oh yeah, real nice consolidation with volume on IBM. Just seconds after the new candle for IBM. I swear it always has weird volume there, doesn't it?
Say they aim to discharge their duty as soon as possible and in advance of the new date.
I guess not. I always thought it was quite a choppy stock anyway. I guess it is just been consolidating though on that deviation for what, a month now though.
To August 29th. There is still this question, of course, as to whether or not
CZR
Microsoft is going to be able to close the transaction earlier in the week. There had been a lot of, I think, enthusiasm or hope from people close to the situation that in fact
oil prices fall by $8 a barrel. Brent and WTI futures hit session lows.
To the CMA in terms of a divestiture of parts of its cloud licensing business in the UK. Something I'd reported on, small, discrete divestiture.
CZR, it's quite annoying. We missed. I don't think I had an alert output when it came into that 54.
No real discussions in person, is my understanding.
It looks like it would have been quite nice. It looked like it bounced as soon as we hit that. Again, obviously, level would have readjusted a bit by then, but even if it was off by 20 cents, would have hit.
Whether or not there will be something called a derogation available to Microsoft. That would be an exemption or relaxation of a rule or law. That's what the word actually means. And it's something the CMA has granted in the past in the case of specific to back in 2016, where they allowed Diebold to close its acquisition of Wincor Nixdorf, but had to ring fence its business activities in the UK. So there was that derogation. Could that be possible for Microsoft? Unclear at this point. If in fact we go beyond the 18th, they're going to have to renegotiate with Bobby Kotick and Activision to extend the merger agreement as it currently stands, given it will expire then.
Good thing we did get out that JPM. Did kind of see now that as it's broken through, would have been down quite a big amount now. Again, it's something I'm going to note because again, we came into the anchor VWAP, missed it by literally like 2-3 cents, got a relatively nice bounce, and then the retest. So that's something I'll have to research into, seeing is that a common thing that retest is basically just more likely to break.
Pay a dividend to your own shareholders of some significance. Would it be as much as $5? Who knows? But that's at least the expectation or hope of some shareholders here, if in fact we go beyond that date of July 18th, guys. So watching it closely, of course. Big victories from Microsoft earlier in the week, but still the CMA stands out there. And frankly, just very hard to fully understand exactly what the state of play is between the CMA and Microsoft.
You almost sounded like a lawyer there. That was good.
Thank you.
But also, I feel
I'm
like
not one, but I play one on TV.
Do you think you're going to be, as an M&A reporter, which you are?
Yes.
Oh, yeah, actually, what's
busier
happened to
now?
coin
Is that
today?
for real?
After yesterday, it closed at what, 107, I think. Oh, it's actually pretty flat. Well, still by the close. Quite a nice move though. I still can't believe how far it moved off that niche yesterday. It's still quite crazy. Again, it is oversold on the long-term charts. Probably not going to be something I swing, considering it's off a relatively strong and big fundamental case. If we still see it up there maybe in a few days, then I'll look to trade it. But for the time being, I'll let the deviations readjust for probably the next few days, and then coming into maybe mid next week, if we're still near these levels, then I'll look to trade it. Again, could be watching JPM then on the short side if we retest the 150 anchored VWAP and we start to sell off. Could be a downside trend and look for the flip. I wasn't paying attention to SPY, which was quite annoying on the long I took on JPM. That was quite stupid of me, saying that that's super weak. If we continue down to the downside, then looking for the anchored VWAPs, I guess. Again, we do have yesterday's closes that will come up first. So you might see a tiny bit of buying pressure sitting there, but right below, again, we've got those anchored VWAPs. Between the S&P futures and the SPY, whatever one hits first is the one we'll look to play first with a bit of size. And if we come down and test the next one, again, can look to play that one as well. Oh, I've just seen that. Yeah, Bradley in Discord said about PayPal being near the deviation. I check it, and again, it's that same thing. When you get the anchored VWAP and the VWAP together, those are the strong bounce locations. So it's quite annoying that we miss that. Again, might not have traded that because, again, look at the time that bounce happened. Did happen at 10 a.m. dead on, which is, again, the time the prelim came out. So usually it is a fade, but I guess it's better to be safe than sorry than trading off a news release. But I guess it did consolidate there, even though the SPY was volatile, so probably could have been alright. But yeah, again, these are the killer setups that work so well. JPM, again, it was only the anchored VWAP, no deviation or level.
Welcome back to Squawk on the Street. I'm Pippa Stevens with your CNBC News Update. The Biden administration is forgiving $39 billion in student debt for more than 800,000 borrowers. The money is not a new program, but rather comes from a fix to administrative issues in the income-driven repayment plans. The announcement comes weeks after the Supreme Court struck down President Biden's plan to cancel debt for more than 40 million people. A suspect is in custody in a string of serial killings on New York's Long Island. The so-called Gilgo Beach murderers captured national attention back in 2010 and 2011 when 11 sets of human remains were discovered on a stretch of highway on Long Island. Police say the suspect in custody lives in a neighboring county. A medical examiner found Lisa Marie Presley died from small bowel obstruction. Her autopsy report says it was likely a complication from previous surgery for weight loss. The only child of rock and roll icon Elvis Presley, she died in January at the age of 54. David, back to you.
Okay, thank you, Pippa. Healthcare an underperformer this year, but one of the top sectors this morning. That follows United Health's latest quarter. Let's get over to Bertha Coombs for a breakdown of that quarter. Bertha.
Yeah, David, it was a strong quarter. They beat on both the top and the bottom line with earnings of $6.14 a share, well ahead of expectations. Nearly $93 billion in revenues, also well ahead as well. Big focus on the earnings call was the medical cost trend. You'll recall that last month they warned that they were seeing much more pent-up demand, people getting back to having knee and hip replacement surgeries, particularly in the Medicare sector. So they did see that. Nonetheless, revenues on the insurance side, the United Healthcare, UHC, were up about 13%. Margins there were pretty good, even as medical costs were in line on the high side. They did continue to see those same trends. They're also seeing, they say, across the board in commercial, Medicaid, and some in Medicaid.
Do you have something to add on this UNH, but I'll wait for them to finish covering this key bit, and then I'll speak on some other point.
But people older, those of us older in our 50s and even 60s are looking for that these days. On the Optum side, which is their services side, they saw overall growth of 25% when it came to revenues. The Optum Health, which is where they have their surgical care and they have all of their primary care physicians, was up 33%. But one of the things that concerned people was that margins have slipped. Margins came in at 6.6%. That's down from 6.9% in the first quarter and 7.3% a year ago. Part of the reason is their doctors on those, what they call value-based care, are offering a lot more services. Now, CEO Andrew Whitty on the call said he will take those short-term headwinds in terms of long-term growth.
I think, if I had the choice on a slightly suppressed margin in Q2 or the very significant growth that we've taken in, I'll take the...
I should be fine now. So, the key thing with the UNH play as well was they did relatively well on earnings, but I remember seeing back, I think it was a month, maybe two ago now. Yeah, so despite a high medical cost, that's not the only thing. There's a lot of people now going in for non-emergency or non-required surgeries more than ever. So that was something that, again, I think if you go back a while, actually, let me have a quick look on UNH. I think if we zoom out a tiny bit, you'll be able to see what I mean. Yeah, here. So we had a big move here. And again, this was, as it was near when they... It was near when they had their earnings. Their dividends, nothing to do with that. This was to do with the non-urgent surgeries increasing. And again, obviously that is going to be bad news for that. We basically gave back a lot of that loss, started sell-off coming into earnings, and again, now we're popping back into this range. So it is still staying within this range. So really, I think the key trading opportunity will be a breakout of either side.
But how we adapt it, how we organize ourselves, I don't have the answers yet. We're all studying it. We're all putting huge teams of people on this, and we all see how we're going to adapt to it. We're looking at it quite extensively. We have our platform that uses natural language processing already. We look at that. We look at big data analysis, and we're looking at how AI can accelerate that.
Let's bring in our senior markets commentator, Mike Santoli, to help us react here at Post 9. Fink comes with some credibility on the inflation front, for sure, last couple of years.
Oh, absolutely. Last couple of years, $9 trillion in assets to oversee. And he was talking earlier in the conversation about all of this, this novelty of having all this fixed income yield available to people, right? 4% plus yields on 80% of all securities. Well, that's because we are structurally in a different spot in terms of inflation and central banks' response to it. I think it's very in tune with...
We also have Tilray down actually 10% on the day, down at 162. Novax is also down 5% on the day, coming back below its third deviation, which was at, or is at, $9. So that has slightly changed. but that's at $9. And again, yeah, we are cracked below it. And one last thing to note is where we're sitting at in relation to the straddles. Again, I use this to kind of see how much of the market is moving compared to how far they are expected. If you see the shadow staying below this VWAP, you tend to see the market not as reactive as markets are pricing in, and so you're probably not going to see as much follow through. If you're above this, then you tend to see a bit more of a reaction. You tend to see a lot more directional and kind of conviction in trades.
That inflation will get near the FOMC's 2% target is roughly consistent with the FOMC's economic projections in June. I see 2 more 25 basis point hikes in the target range over the 4 remaining meetings this year as necessary to keep inflation moving down.
Again, JP Morgan is now only up about 0.3% on the day, so it looks like it may give up all of its earnings move.
Dependent. He said, I see 2 more rate hikes. So if you want to know who was against the pause last time, it's certainly, I think Waller made it pretty clear, and that, they're not rejoicing over the 3% inflation number. You know what they're looking at? 4.8% core inflation, which is a big improvement, but it's still more than double their target.
There's no doubt about it. But again, I think that when they say the expected thing, given where the data are, the market can say, okay, of course they're going to say that. There's not an element of surprise there. And I do think the pace matters. The fact we now have a precedent for them skipping a meeting without hiking rates with inflation well above their target. So that can happen down the road again. If they go 2 more times, if it's July and September, it just shouldn't matter, given all the Fed's already done. In other words, my view is, if they've done too much, it's already happened. It's not, from here on out, if they do 50 more basis points over the course of 3 or 4 months.
You know what else is inflationary?
What?
Taylor Swift.
For sure.
Beige Book mention. I love the Beige Book, and this is why.
I do.
Fed Bank of Philadelphia quoted. So here's what they say. Despite the slowing recovery in tourism in the region overall, one contact highlighted in May that was the strongest month for hotel revenue in Philadelphia since the onset of the pandemic, in large part due to an influx of guests for the Taylor Swift concert in the city. And this is happening across the country.
Well,
I don't have to tell you, Mike.
You don't have to tell me, because I believe in the Fed district of Philadelphia is Pittsburgh. And if I tell you what I paid for a DoubleTree Suites room in Pittsburgh,
your kids went in Pittsburgh.
in June, for them to go to the Taylor Swift concert, yes,
I'm glad.
It could have been an anecdote in the
just
Beige
paid
Book.
up for MetLife. At least we didn't have to pay for a hotel room. I wasn't there, obviously.
Yeah.
Have you been?
I haven't been because I wasn't willing to pay more thousands of dollars for a ticket.
Nobody in the family would tell me, and I never want to know.
The tickets came at face value.
I didn't win
in the
them,
fan
though.
lot. No, I know. Mine, I'm saying.
Well, I'm trying to get the face value in Europe next year in Paris, and woke up at 4 in the morning this week, and guess what? 879,000th in line, and then it crashed.
I'm sorry to hear that. Mike, before we go, and I don't want to get into the discussion of Taylor Swift, of course, cut into it. NVIDIA and AMD, just give me your take here. I mean, they're up almost 4%, new highs for NVIDIA.
It's sort of like this amp goes to 11 on these. I mean, you just see the daily push higher. It's the old game from 2021 where we gun the call options and we send them higher. It's gotten to a point, I think, of the NASDAQ 100 to a point of...
Again, strong pullback on the indices now, so SPY and ES. SPY's coming into yesterday's close, so again, potentially see if there's any move. But if we continue down, looking at those anchored VWAPs, looks like SPY will come into the anchored VWAP first, and then the S&P futures should follow if we do continue down.
What's in the overall market is what I'm more interested in, and it's kind of creating it's stretched pretty tight at this point in terms of how far ahead of things that handful of stocks. And now we've broadened out pretty nicely over the last month or so, since June, since the economic numbers have gotten better, but it hasn't come at the expense of those stocks. Final point, that NASDAQ 100 rebalancing we talked about earlier in the week, at the close today, after the close, they're going to basically detail exactly how much money in the weighting is going to come out from the NASDAQ 100 in those top 5 or 6 stocks, I guess.
Losing the gains here. S&P unchanged right now. Still nice gains for the week, though. Mike, thank you. Mike Santoli, see you soon. We've got a big interview in the next hour of Squawk on the Street. The CFO of Wells Fargo, which just reported results this morning, stocks doing well, will break it all down for us in the next hour. The bank stocks in general, they were kind of little change. Actually, Wells Fargo has given up some of its gains, as you can see, as the overall market has. JP Morgan still holds more than 0.5% gain. And Citigroup, the other reporter this morning, down 2.25%. We'll be right back.
Seems like AT&T ticker T is kind of bounced coming into that second deviation. Again, did crack those 52-week lows, but coming into that that support, seems like it's holding quite well. Also, you can see on JPM retested that anchored VWAP. Seems like it's being quite weak off there. So again, we'll see how that reacts, and does look like the SPY will potentially break its close. And if so, again, looking at those anchored VWAPs will be those key levels.
Help.com.
A quick programming note as we go to break tonight. Don't miss a special edition of Tech Check, 6 p.m. Eastern Time, where Deirdre Bosa will interview ARK Invest's Kathy Wood, talk some Tesla, what's behind some of those sales, Bitcoin, and the tech rally, which continues in earnest today, although the S&P back to flat at 4509. Stay with us.
Again, so it looks like we're going to crack lower. We got 449.29 on the SPY as that key support. If we break down on the futures, we're looking at $4,538.15.
There's a level of expectation that they have that is just not realistic. And they are adding to a set of challenges that this business is already facing that is, quite frankly, very disruptive.
Bob Iger being rather combative there in terms of his reaction to the decision of the Screen Actors Guild to go on strike, and joining, of course, the writers who've been on strike for what I think it's 70 days at this point. It's going to bring production to a halt across the board. Already some premieres that are not happening for existing, for example, movies where the actors are not showing up and have walked away. And you can see the impact, I would assume, on some of the stocks here is certainly due to concern about the strike. You had Credit Suisse lowering its price targets on any number of the stocks as well. Carl, as you said earlier, he came in for some criticism on Twitter for those comments. Didn't really get, you know, I mean, we all know it's going to have an impact on Disney's ability to fill its content hole, as it will for all these other names.
Yep, a big journal piece today about him showing his models of his yacht in his office, talking about building a new yacht. Actually, maybe the bigger story is going to be what happens if UPS Teamsters goes. What happens if UAW Big Three goes. There's a paper out today that a UPS strike could be one of the costliest strikes in a century. A 10-day strike, $7 billion in costs. So even though the percentage of labor that is on strike right now is nowhere near where it was in, say, the 60s or the 50s, you know, you get to 2-3% of labor on strike and you'll start to feel it.
A lot of people think that's also another inflationary force in our economy if they're forced to, you know, negotiate bigger wages at these grand scales. And the question is why, you know, labor has so much power. It was always, you know, tight labor market, right? There's just more openings than there are people for workers, so they're enabled and they're empowered. So we're still seeing that across the economy, I think, and it's clear as we continue to see groups of people go on strike.
Yeah. Something else that we discussed, Iger and I, of course, was the relationship between the state of Florida and Disney. It's such an important part of.
Yeah, I do have to head off in a bit, so I think we're going to end the stream here. Again, it looks like the SPY now is getting a bit of a bounce off those levels. If it does come back again, the anchored VWAP's around 449.30 on the SPY. Again, JP Morgan's retested it. Anchored VWAP looks still quite bearish. UNH staying strong on the day, even though the SPY is turning weak. Again, Delta staying weak until we get out, kind of going back to the $50, not paying too much attention to it. And we have ARC, mainly just got it up because they were mentioning Cathie Wood, but not too focused on that. Maybe if you get a pullback back to around the 49.20, could be a potential short, but that's about it. Anyway, I hope you enjoyed the stream. If you did, why not drop a like and subscribe, and I will see you back Monday with another stream. And this weekend, I have some analysis videos coming up and one video to do with the options, which if you don't trade options all that regularly, could definitely be a helpful video.